For decades, starting an international business meant fighting a war of attrition against geography. You had to navigate foreign borders, fill out mountains of paperwork, and pay immediate corporate taxes that drained your capital long before your company had a chance to actually grow. Then there is Estonia, a sovereign European nation that completely decoupled the concept of a business from its physical location. By designing a system specifically for borderless operation, they climbed to the #1 spot on the global tax competitiveness ranking. Their solution relies on a system called e-Residency. This is a state-issued digital identity. It doesn't grant you physical citizenship, but it does give you the legal authority to establish, accredit, and operate a fully functioning European Union company entirely over the internet. Beyond the digital access, the primary engine driving international founders to this system is the tax code. Estonia allows businesses to legally pay a 0% corporate tax rate on all reinvested profits. By digitizing the legal framework and removing the immediate tax burden on growth, geography is no longer a strict legal prerequisite for entering the European market. It is simply a choice you can make from your laptop. The process begins by applying for your e-Residency card, which is valid for 5 years. The initial capital required is low. You pay a €150 state fee to the government, alongside a €50 consultancy fee to ensure your application is structured correctly. Next comes the physical touchpoint. You wait roughly 4 to 5 weeks for the secure digital ID card to be manufactured and securely shipped to the Estonian embassy in Ankara, where you pick it up in person. Once that card is in your hand, the timeline accelerates. The actual legal incorporation of your company happens online in just 1 day. This is covered by a one-time fee of €775, which pays for the setup, the exact state taxes, and a mandatory legal address for your first year of operation. Immediately after incorporation, you open your business bank account. Because navigating foreign banking protocols can be highly technical, you receive dedicated Turkish language support over Zoom to walk you through the entire account activation process. What used to be a months-long legal battle, requiring international flights and physical property leases, is now a passive 5-week wait, followed by a single day of digital activation. This diagram shows exactly how Estonian corporate taxation operates. Money flows into your company, and then you have to choose between 2 distinct paths. You can either retain those earnings, or you can distribute them. If you route that money down the retained earnings path, meaning you leave the profits inside the company to buy equipment, pay for software, or fuel your operations, the government touches absolutely none of it. The rate is exactly 0%. However, if you route money down the dividend path to extract it for personal private profit, it triggers the standard corporate tax. The government takes a 22% deduction before the money hits your personal account. But the numbers on paper aren't totally rigid. With proper, compliant financial guidance from an accredited partner, you can often legally optimize that 22% dividend tax down to somewhere between 0% and 2.2%. It is also important to separate profit distributions from daily operations. As a non-resident, you can simply pay yourself a standard salary or pay your freelancers on whatever schedule you want without Estonian government interference, provided you track it correctly in your annual returns. The 0% rate is not a loophole. It is a deliberate economic engine. Estonia explicitly designed their tax code to force startups to aggressively reinvest their capital and scale their operations, rather than instantly cashing out. Operating inside this advantageous digital infrastructure does come with a strict set of rules. The system works because it demands precise compliance and rigorous ongoing accounting. This chart maps out exactly how those accounting costs scale. But there is an important baseline. If your domestic sales inside Estonia remain under €40,000 a year, paying for monthly accounting services isn't strictly mandatory. Once you pass that threshold or require active tracking, the monthly costs scale with your activity. It costs €65 for up to 10 transactions, €80 for up to 25, and €110 for up to 50 transactions per month. To be clear on the terminology, a transaction in the Estonian ecosystem means every single individual sales invoice, every expense receipt, and every individual transfer into or out of your business bank account. Then, starting in year 2, you hit the standard annual upkeep. This includes a mandatory €200 renewal for your legal physical address, and an annual tax return fee that typically runs between 200 and 250 euros, depending on your volume. By tying accounting fees directly to transaction volume, the cost of running an Estonian company remains highly predictable. Your overhead scales in perfect tandem with your actual revenue, keeping early-stage founders safe from crushing flat-rate monthly bills. When you balance the ledger, the upfront setup fees and the scaling monthly accounting costs buy you something highly valuable: completely borderless access to the European Union market, backed by a tax code that lets your operating capital grow at a 0% tax rate. The system is designed to be frictionless, but only if you follow the rules perfectly. That is why working with a locally accredited, native Turkish-speaking partner is essential. They navigate the exact legal requirements so you don't make costly compliance errors. You no longer have to let geographic borders dictate the size of your business. If you are ready to set up your European company without ever leaving your home, book a consultation today and launch your borderless enterprise.